Good evening, everyone. Welcome to this session, Volume Insight through Killer Trader. The topic on agenda for today is we'll be discussing a very simple but very useful concept called as the median. Some of you may already be familiar with it, and after that, we'll proceed to the market analysis for tomorrow and see how the markets are positioned. Before we proceed, regulatory disclaimer from my side. I'm not a SEBI registered analyst, and all the information provided in this webinar and after is only for your learning. There is a risk of partial or complete capital erosion in the financial market, so please consult with a registered financial advisor before you undertake any participation. Now, what is median and how is it different from pivot points? So, can everyone see my charts? So, let me disable volume profile for a moment. There is a very simple tool called as median, and as the name suggests, this tool relates to understanding the midpoint or average price of the market's movement. This is very important, and this can help you in identifying the probable direction of the market movement, because price trading above or below median and a couple of other parameters can actually give you some useful insights. In Quant Tower, go to indicators and go to daily OHLC, double click on daily OHLC. Session type should be all day. Number of days to calculate, you can keep it to 10, 20, 25, the number of days you want to look back. And here you will see an option of close, high, low, middle line. The middle line is your median. So basically this indicator, this tool tells you the open price, high price, low price, and the close price. Apart from that, it also talks to you about the median price, which is the average price that the security has traded for a particular time period, in this a day's time period. Now, the most important aspect of it is that a lot of traders use median with a zero setting. That is, if you see on FinNifty, L stands for low. You see that the low is for at 19,175, which is your intraday's, which is your current day's low. Basically, the close price is the same, and the open price is at 19,386, which the tool shows. But the major issue that comes with using a current period's settings is that, let's say now that the markets have closed, these values are already fixed. Let us say in live markets at 11 or 12 p.m., or when the markets are actually moving, these values will tend to become rather dynamic. That is, as the market prints a new low, your low value will change. As the market moves up and down, your median level will change. So in that case, you simply cannot rely on information when it comes to price, which is very dynamic. Every day, the market trades in a certain range, and the way the market trades in a certain range is very, very important for the next day's trading session. When you're a day trader, or when you're trading in a particular day, you should not simply blindly look at what the market is doing at that moment. That is very important. Of course, we have tools like order flow or footprint charts to help us analyze supply and demand at that moment, what are the markets doing. But apart from that, you also need to understand where the markets are trading, and is this an important location, is this an important price area or not. And for that, the median, the daily OHLC or the median tool can come in very, very handy for you. For that reason, you cannot simply use an intraday's median point for the same day, because that will keep moving throughout the day for you, depending on the market movement. And since this is only price based, you can't rely on this. VWAP is a totally different story for you. So you go to daily OHLC, and under use previous data offset, you mark one. Now the median values have changed. All the values have changed for you. Why? because right now on 31st, the values that I am seeing are not the values, the open, low, the median, close are not my values for 31st, but but they are my values for 30th. So basically, as I said before, one of the most important principles that you can ever learn or use in day trading is that every day is an extension of the previous day's session. And since there is a certain impact on the price values, the volume values, the participants' positions that who have taken positions or wound up their positions on the previous day, I use my previous day's OHLC data for my current day to help me understand certain parameters. For that reason, make sure that use previous data offset in days should be kept for one. I don't need the close price. So I'm disabling it. All I need is high, low, and median. Open and close prices of the previous day is not something that I actually need. Only in case of reversals, I would need the close price. But apart from that, the most important aspect for me is high, low, and median. Let me change the color. Here it is. So now we are seeing that the blue line is the median line. So every day when the markets are opening, at any point when the markets are opening, after this, once you plot the median, now that you have understood what a median is, basically open plus high plus low plus close divided by 4 is how your median is calculated. This calculation is somewhat in line with your simple pivot points, but not completely. In pivot points, your open price is not considered. High plus low plus close is divided by 3, but in case of median, even your open price is taken into consideration when the value of the median or the middle line is being calculated. And I personally prefer to use median OHLC than pivot points for multiple reasons. Now, the first and the foremost thing that you need to look out for, or when you are trading using OHLC and especially median, is see where the markets are opening on a particular day. You have three important parameters. That is, you have your median, you have your high, and you have your low. So these three parameters become very important now that you need to gauge on a particular day. On any day, if you see that the price is opening directly below your previous day's low, that is, for example, in this case, price is opening below your previous day's low on any given day, then there is a higher probability that it can be a down trending day. That is, previous day's low and high are important areas, because as long as market is trading within previous day's low and high, you call it basically a range bound market. When price is above previous day's high, the markets are in an uptrend. When price is below previous day's low, the markets are in a downtrend. When you see that the open is directly below the previous day's low, for example, then there is a possibility, there is a greater chance that the market can move to the downside. And a trader should be on the lookout to trade in the direction of the markets, but not basically try to counter these kind of moves on any day. Any questions? No. All right. If there are certain rules, for example, if the previous 2 days are down days, then on the third day I don't basically look for a breakdown trade on right at open, but I would rather look for pullbacks. But more about those rules later, as we are right now focusing at open. What about median? Let's say now price, in this case, for example, price opened between your median and between your high. It opened right near median and started moving up. So what does a median price indicate to you? Average price. If price is trading above your median, then it tells you on a particular day, then it tells you that today the markets are trading above the average price of yesterday. So when the markets are trading above the average price of yesterday today, then there is a higher possibility that the markets can move up today till a certain point, then come down. And what is that certain point to the upside? Previous day's high is what you need to look out for. Any questions till here? If market opens between PDH and PDL, what would be the trend? If market opens between PDH and PDL, by default, that is a range opening for you. From a price perspective, that is a range opening for you. Now you need to see, are we opening above the median or below the median? For example, on this day, we opened between previous day's high and previous day's low, but we opened above median. On this day, same, we opened above median, but we started cutting through it right at open. Now take the example of today, for example. We opened above previous day's high, but what kind of price action are you seeing at open? When you see the open above previous day's high, you rather would expect the markets to move up. But right in the opening 5 minutes, if the markets are coming down, again the 2-day rule applies here. The markets are coming down. It slipped right below previous day's high at open. So can you expect the markets to move up until your previous day's high is taken out at this point of time? No, you can't. So be it, let's say on a particular day, the market opens below your median and then comes down all the way to previous day's low, then you understand that until that point the trend is to the downside, but price is trading at previous day's low. The single price point from where buyers have put in efforts, buyers started showing activity the previous day. That's the reason why the day low was actually printed at that point. So that's not a place where you need to look to open fresh shorts, but you would rather wait for a pullback towards the median. Is that clear? Or any questions? You can take, we can look at Bank Nifty as well. Oh, HLG. Where was the low printed, around which price point? So if you understand the first and the most important thing when it comes to day trading, as I said, is that uh, apart from understanding the market context, you need to have a very clear idea of price locations. What is a good location to take a position? What is a good location where you should avoid taking new positions? For example, at open today, a lot of traders would have been a bit bullish on the markets considering yesterday's strong reversal. And if someone went long, or let us say, even if someone shorted the markets at random location after this down move, then that would mean trouble for them. So understanding these kind of moves, understanding this, where exactly you can look out for new trades and where exactly you need to avoid looking for new trades, but rather wait for a pullback or reversal, is very, very important as a day trader for you. Yesterday, for example, markets opened below your, they started coming down below your median. This was a very good short opportunity for only price based traders at this point, for example. But when you see that the markets are again reversing above the previous day's low, when they are re-entering previous day's low, say even if you use order flow, this is exactly the area where a large buyer came in. Using limit orders, he bought in heavily into this market. That was the same update that I had shared as well. That you can expect a pullback from here because large buyer has entered and is trying to take control of the market. So once price comes above this particular range, now this is not an ideal point for you to attempt a short trade again, but rather look for a long trade till the median. I need 150 point more. Again, the day before that, opening at previous day's high, and if price is holding above previous day's high, then you can expect price to move up. Anyone? Any questions? Not able to see your screen share. I think everyone else is able to see my screen. You can take the example of any day using the type of opening that you are using and where exactly median is positioned. And from there, you can see price starting to come down or move up. For example, this day, we opened below median, price took resistance from the median point, and then it started to come down. Previous day's low is a very ideal target at that point. Same situation here. It's not just going into the right trades, but understanding when exactly you need to pack up or when you need to exit out of incorrect trades. As long as price is above the median, say that you are in a long position, you have taken a trade. But say when price is coming below the median, then you have no reason to be in a long trade. And that's the same thing here. Today we opened with a gap up, and then right within the initial 5-10 minutes, we started moving down. You can use order flow as an additional confirmation pointer if you're already using order flow. Even this was the update that I had shared today morning, that one should not chase longs but rather look for pullbacks and trades to the downside. And this is a clean and clear case of profit booking. Updates I share in my own Telegram community. I will be sharing the link at the end of the session. This is a clean and clear case of profit booking. You can see how the bids are greater than asks, and looking at certain pointers, you can understand that there was in no way demand was be shown here. There was no demand coming into the markets today, but at the same time, it was not a day where you can look for a large short. As I mentioned, you could not look for a large sell side positions, but it would be more of sideways to pull back to the downside, because it's just the first round of profit booking. The last 2 days, Friday and Monday, a lot of traders went long, big participants went long, and they booked out profits today. Some of them booked out profits today. Some longs are still present in the system. Tomorrow would be a very interesting day for a trader to look out. The three levels are calculated based on previous day's data or each trade. They are calculated on the basis of previous day's data. That's the reason I'm using the offset one. By default, this is at 0. I don't want this to be at 0, but I would rather want this to be at 1, because on today's price, yesterday's data calculation is being plotted for me here. Is that clear? Any other queries? So the first step is to use the daily OHLC tool to look for your median, high and low. Second step is to identify the type of opening that you are getting and the previous day's market movement, whether it was an uptrend day or a downtrend day. And the third step is to see at open what kind of price action that you are getting. The open 5-15 minutes, you should wait and see what kind of price movement is seeing, whether it's a bullish price action or bearish price action, and see if it is above or below these important levels for you. Once the day is in progress, say 1 hour of opening trading session is completed, 9:15 to 10:15, then you can monitor, the current session VWAP as well, and understand what kind of supply and demand is coming above or below session VWAP. This is your VWAP. I presume everyone knows what is VWAP and how to use it. Anyone else? Any other questions? How median is different from volume profile? Volume profile is a totally different tool. Volume profile tells you basically about the volume activity at every price point. Median is simply the average price at which the security traded the previous day. Zerodha gives a indicator known as valuation lines 1, 2, 3 sigma values. I am not sure about that, Nagaraj, so I can't answer that. Setting of VWAP. VWAP setting is rather simple. It is a days VWAP. Value is 1. I don't want standard deviations for my day trading, so I have turned it off. Okay. So let me summarize the 3 basic steps of using median once again, so that it becomes clear for everyone. Again, this may seem a simple tool, but this can help you in a lot of situations to understand the direction in which the markets have a higher probability of moving. Is it above median, below median, near previous day high, or near previous day low? Where did it open? So be it whether you are a stock trader, whether you are an index trader, futures or options trader, make sure that you use it. So the first step is to use the daily OHLC. Second step is to look for open type. Third step is to look for order flow analysis confirmation if you already use it. If you already use order flow for your understanding at crucial points near median, at previous days high, these kind of rejections, you can always look at order flow to confirm if this is a resistance area, is supply actually coming at this resistance point. Is it like a POC? No, it's not like POC. Anyone else? Any other queries? If not, then we'll move to the analysis of the next day. So even after you start using it, if you still have any questions, feel free to let me know. I'll share my Telegram ID. So please let me know if you have any questions. I'll be more than happy after the previous 2 sessions where I explained the basics of volume profile analysis. I got quite a few questions and which is very nice. I took my time answering them, of course, but profiles. So the first question that I got was that at today's open, I was mentioning that there is a high chance the markets can start coming down looking at the pre-market gap up, but today is not a day where one should chase longs. Because if you look at markets from a contextual perspective, the way the markets were located after 2 strong uptrending days, that the place where we were opening with a gap up was not a good location to actually attempt a long trade. So from a contextual perspective, from it was not a day to go long. Second thing that added to my confirmation right at open was, as I shared before, this particular pointer where looking at order flow, when you look at the tape, the bid and the ask, even the basics of order flow I explained in an earlier webinar. So those who did not attend, the link will be shared, you can watch it, where I explain the basics of order flow analysis. These 2 bars, especially this opening bar in both Bank Nifty and Nifty, indicated that there was profit booking in play. That is, those traders who were long earlier were booking out profits. Especially in Nifty, it was rather very, very clear looking at the bid and the ask side volume. Range bound, sideways, or no trend, how to identify those? There are multiple ways to identify those, Arvind. I personally use volume profile, order flow, and also my own tools to understand that. For tomorrow, let's analyze Bank Nifty since it's Bank Nifty settlement tomorrow. You can see that today the markets have made a distribution profile, that is, price opened in one direction and then closed in another direction, and the value area is to the low. So this indicates that there is good amount of selling pressure in the markets after the initial profit booking. Even this pullback was sold into market started coming down after this pullback above VWAP. This is where fresh shorts were added actually. So this kind of volume profile pattern indicates that there is distribution in play in the market. So tomorrow open becomes crucial. Say we open below previous day's low, that is below today's low, we open and start moving lower. We start moving lower, then there is a higher probability that the markets can move down. If it is a major gap down opening tomorrow, if it's a good gap down opening tomorrow, then we would need to review once again. But let's say if it's a flat open or a normal gap down open and the markets are moving below today's low, just a moment. This becomes my previous day's low for tomorrow. Then there is a high probability that the markets can continue to move down. Say we have a gap up opening tomorrow, or tomorrow the market start moving up right at open. So you have your point of control right at the lows near your value area low as well. So this tells you that the entire area, this particular zone that I have marked, so this entire zone that I have marked, a lot of selling activity was witnessed in this location. Initially, some buyers started stepping up here in the middle of the day, but then they couldn't defend it sufficiently, and that's the reason we have a closing towards the low. So as long as price is below this location or starts moving down, then the context and the structure for tomorrow's market is that there's a better chance the markets will move further lower than move up. For me to look for bullish opportunities in the markets, the bare minimum that the market has to do is to travel above 43,260, which is a reference that I'm using. So any, say market opens above this yellow zone tomorrow, above today's point of control, and starts moving up, I would rather look to sell these pullbacks than attempt to go long here, because there is a 2 point confluence here. If market starts moving up from this location and then gets into a sideways range throughout the day, of course I'll be using order flow as well to see what kind of buying and selling activity is happening at that point of time. But if market is above this 2 point confluence, which is my point of control and value area low also, which is my previous day's low, then this can get into a bit of a sideways day if the initial 1 to 2 hours the buyers start holding up this range basically. So all in all, tomorrow's, as long as we are trading within today's range tomorrow, this it's not going to be a very easy expiry. Looking at the way volumes are spread, the way volumes are distributed, and the positions are built up, this can get a bit of a tricky expiry with spikes on both the sides. So unless price goes above 43 to 60, we see large buyers stepping in and taking price above 43 to 60. There is not much possibility of short covering. But if this happens, then there is a good chance all the writers who build positions in this area, they would have to run for cover. Any questions about this? These are future levels. The references that I'm using are futures, not spot. So say if we open below today's value area low, or we start moving up much more higher, that is when my previous week's volume profile would come into play. This is my current week's volume profile. I don't look at the current week's volume profile because it's just day two. So this is my previous week's value area. Even from previous week's volume profile perspective, we are not at a very good location. We are not at a very good point from a structural perspective where you can expect the markets to give in some support. until this area, because this is where you start seeing that the volumes are starting to get thinner. So this is all a very good area where quite some volumes have been built up at this location. So from here, if we start moving down, there is a good possibility that we can see a drop till 42,700 at this point. But the key is that we need to open below this and start seeing some sellers activity at this point. As I said before, looking at the way the markets have come down the previous week, and then from last Friday we started moving up, and today's sell off, this is a bit of a tricky area that we are trading in right now. So guys, is my screen not visible? Can everyone see my screen? All right. So these are very tricky waters that we are in. So if you are someone who likes to trade extremely in a very conservative way, so you need to make sure that you reduce your exposure when trading tomorrow, especially tomorrow's expiry, because for all intents and purposes, the way the markets are structured right now, this is not going to, you can't expect a singularly one directional move into the market. Can you please repeat what I was referring to? Sure. So what I was talking about is that from a weekly volume profile perspective, since we are from a session perspective, we are at a 2 point confluence, the previous day's low, value area low, and the point of control. So if we open below this or start moving below this area, then there's a good possibility that we can cross over this high volume area and see a drop till 42,700. There are no good support into the market. There are no good areas that can give support to the market still 42,700 from this point tomorrow. So to the upside again, as we discussed before, 43 250 260 is a reference that I'm looking at. So either ways, until these ranges are cleared, this is going to be difficult. That's what I was explaining, Keshav, that you can see there's a good possibility of seeing dual sided moves since these range, the references are also quite nearby, 42,700, 43,000, and 43,250 for now. Anyone else, any other questions? With this tool, can we make out where there are more SL placed? No, you cannot. These are anchored VWAPs. No, these are my intraday VWAPs, session VWAP. All right. Okay. I'll be sharing my Telegram contact. So if you have any questions at any point of time regarding what is explained, feel free to reach out to me. Please state your name and explain your question in detail, and I will be more than happy to address your questions. Let me share my Telegram ID. Apart from that, quite a few people have asked. I conduct my own mentoring program with respect to order flow analysis, volume profile, and also share my proprietary tools, which are velocity matrix, delta bands, and killer trader optics for intraday trades. Just a sneak peek into them. So anyone is interested, feel free to message me on this ID. I will be sharing the details of the learning program that I conduct. This is a comprehensive program that covers everything about volume profile and order flow and spans around 20 hours of learning content. I hope this session was useful to you folks. If you have any questions, as I said before, feel free to reach out to me. Few questions that are still pending, that in this scenario we use volume profile to check where is the buyer. The volume profile is to help you understand, a.k.a. the context of the market, not just to see where the buyers are. Which channel you published, I'll be sharing the channel link as well. And any books to learn volume profile, market profile, I'll also share a couple of references. learning references that you can use. So I have just shared the link to the Telegram community and my own personal ID. So please feel free to join that. Okay, and I'll also have the Quantover team share my Telegram ID in the channel. All right, then see you all next week. And in the meanwhile, those who are attending these sessions regularly, if you have any topic suggestions, feel free to drop in. I'll do my best to conduct sessions on that. I've already requested this a couple of times before, but received only one or two responses. Okay. So feel free to let me know any request, any topics that you want me to conduct the session on. Over to you, Vidhi.
Yeah, thank you very much, Katie. Thank you very much, everybody. It was nice having you all. We'll meet up again in the next webinar. Thank you.